good evening, depending on what your the time zone is. My name is Juan Sarmiento, and I serve as executive presbyter for a group of churches here in the northwest part of the Los Angeles area called the San Fernando Presbytery. We welcome each one of our churches representative from different congregations of ours, but also other people that have sign up. So there's information about this opportunity to learn more about this employee retention credit, and we welcome each and every one of you to this time. During this time, we're going to have a presentation, and then we will have the opportunity to interact, ask questions, and possibly provide some initial guidance related to that credit. I would like to begin with prayer and then introduce Terry Monahan, that is here in this call. Let us pray. Loving God, thank you for giving us the opportunity of knowing that in the midst of the challenges that we have faced, your grace is real. You have sustained our churches and other organizations, and that you have given our society the capacity to deal with the challenges that we have faced over the last couple of years. As we go about our conversation today, we ask for your blessing, and I thank you for the resiliency, the perseverance, the creativity, and the unity that your people has displayed in the midst of these times. And we ask that you bless our time together in Christ's name. Amen.
Amen.
As I mentioned, opportunity to talk about the employee retention tax credit displays a little bit of what we try to do as a family of churches, a community of churches, is to be a resource and to provide possible not only encouragement, but also things that could be very practical help to our congregations. And one of our congregations that has made use of these employee retention tax credit is Westminster, Westlake Village. And as I mentioned before, its business administrator, Terry Monahan, is here with us. And I asked that she did a brief overview and introduce our guest today, our speaker. Welcome, Terry.
Thank you, Juan. Hello, everyone. So I know time is of the essence, so I don't want to repeat anything that Juan has said or be redundant to what I know Jeremiah is going to present. But I am the business administrator here, and I will just say to you, applying for, determining if you're eligible and applying for the employee retention credits is absolutely something you need to do. And we will help you with the resources to be able to do that. I was astounded at the amount of money that we were entitled to, and it did not take all that much time. What I learned from Jeremiah and his company that he has with his brother, Verity, tax credits and incentives, is especially those of us that are located in Los Angeles County, as well as I think at the time for us, Michigan was also severely impacted because of the severity of the protocols that were imposed on all of us. It was very, very clear that that we were going to qualify. Verity, their team, they helped Westminster determine upfront to get an estimation before we put in any time whether or not we were going to be eligible for any refunds or credits. And I'm so glad they did. It was not difficult at all to convince my leadership and elders that we should do this. No upfront money was required by Verity, and I will say that that is not the case with some other companies, because there's a lot of companies out there that would help you figure this out. And Verity, literally their crew walked us through step by step what we needed to do, because when I took the webinars about the employee retention credits, I was baffled, and I didn't want anything to do with it, because I thought there's no way that I have the time nor the knowledge to be able to apply for this. But Verity took all of that away from us. It was amazing. You will need some specific things, and I think I'm going to wait and address that in the question and answer, because some of that may be embedded in Jeremiah's presentation. So I'm going to introduce Jeremiah, and then even separately, any of you that have questions or want to pursue this and want to talk offline, I will make sure that before we sign off, we share how to reach me, because I am a big supporter, not just of Verity, but of this program, and would like everybody to be able to take the next step forward. So Jeremiah, why don't you go ahead?
Perfect.
And let's get into the content.
Sure. Hey, Terry, thank you so much, and I appreciate the kind words. All right, well, let's dive right into this then. So the employee retention tax credit, we're going to take a look today at, first off, what this incentive is, what it's about, where it came from. Then we'll kind of talk about some of the mechanics of it, and then we'll talk about qualification for you guys, for churches in particular. Okay. You could get all my screens right here. Okay, so the employee retention came about under the CARES Act. This was the first stimulus package that came out to address what was going on early on with COVID. This is March 2020, so right at the beginning there, when things started to escalate. This is right about when a lot of the stay-at-home orders first got ordered, under the CARES Act. So the PPP loans also came out under the CARES Act. Initially, you couldn't claim both these credits. Congress changed that in December of 2020 under the Consolidated Appropriations Acts, where they expanded the employee retention tax credit and made it so that you could claim both the PPP and the ERC, just not for the same dollars. We'll talk about that a little bit more. So no double dipping on the programs, but you can claim both. The third stimulus package in March of 21, the program was again expanded. So with all of these three packages, you have new statute, many pages of statute that dealt with the employee retention tax credit. In addition to these statutes under these three stimulus packages, the IRS has released about 6 notices, which, I mean, that first notice 2021-20 has over 100 pages of regulations on it. All told, we've got hundreds of pages of statute and regulation for the employee retention credit. Point I'm trying to make is that there's a lot to it. At face value, it seems fairly straightforward, but when you start peeling the layers of the onion back a little bit, the complexities start to emerge. And what we've got, unfortunately, is a situation where a lot of people moved very quickly up front to claim this credit. Before a lot of the regulations came out, you had consultants who were not very knowledgeable about the incentives helping out, and really just leading people down a wrong track. And it's unfortunate, because I do believe there are going to be people who's going to have to pay some of this money back. And that's certainly not a situation anybody wants to get into 3 to 5 years from now. So one of the big things we're looking at is just making sure that the qualification is tight, and that all T's are crossed, I's dotted before you proceed with this credit. Okay. So what is it? The employee retention credit. First off, it's an incentive for businesses who were negatively impacted by COVID-19. So you took a hit somehow. You were negatively impacted, yet you continued to pay wages or health plan expenses during that negative impact. So to qualify for this and to show that you had a negative impact, there's two ways of doing this. The first one is to look, was your organization, your church, subject to a government ordered shutdown? And I think everybody can raise your hand on this one, with most of you guys being in California and the LA area. You were one of the hardest places hit. California, New York was tremendously hit hard. Big restrictions in Michigan and Pennsylvania. I'm in the Atlanta, Georgia area. I think our churches were required to be closed for a couple weeks, and that's it. So a lot of churches obviously chose and elected voluntarily to remain closed, but there was no mandate to be closed here in the state of Georgia. And because of that, many churches in Georgia don't qualify for the employee retention credit, unlike you guys in California, Pennsylvania, Michigan, Oregon, Washington, where churches were hit pretty hard. Okay, so government ordered shutdown. If you were subject to one of these government ordered shutdowns, that can be a full shutdown or a partial shutdown. Then you're going to qualify for the employee retention credit. The second test you can look at is gross receipts. That's just looking at your revenues or your donations that have come in. Did those take a hit? And it has to be a very big hit. So for 2020, your revenues, all revenues, and that's kind of the fully loaded revenue amount, has to be down by 50%. And you would be comparing that quarter, any quarter in 2020 to the same respective quarter in 2019. So 2020 quarter two, you look at 2019 quarter two, were you down by 50%? In 2021, they made it easier for churches to qualify, for any business to qualify, and you only have to be down by 20%. But again, you're going to choose a quarter in 2021, and you're going to go back to 2019 before COVID, that same respective quarter. You only have to be down 20%. The gross receipts test is where we would always start with this, because it's straightforward, it's black and white, there's nothing subjective. So if you qualify there, it's a lot more solid footing. The government shutdown orders, that involves my research team. That involves going and pulling orders. That involves analyzing the orders and seeing, were you at 50% capacity, 25% capacity, 75% capacity, you know, what happened? What were those restrictions? And making sure that a more than nominal portion of your business was impacted. This is an example of the gross receipts analysis there. I'm throwing this up there, and it's kind of a lot of busy chart, but it's highlighting a couple things here. One point I would like to highlight is there are some safe harbors in here. So if you don't qualify, if you don't hit that 50% test in one quarter, sometimes in certain situations, you're allowed to look back at the prior quarter. In quarter two here, they're at 48%, so they're at a 52% decline. And then they went up to 83, so they're over 80%. So now they're no longer qualified for the following quarter, but they are allowed in this quarter. So generally speaking, when you qualify in any one quarter, you're eligible for 6 months of wages and health plan expenses. So they're going to qualify in quarters 2 and quarter 3 of 2020. Quarter 4, they're ineligible. They're not at 50%. And then in 2021 quarters 1, 2, and 3, again, you can look back. So in the current quarter, if you're not eligible, you can look back to the prior quarter to see if you're down by 20%, which they were in Q4 of 2020. So quarter 1 qualifies, quarter 2's down by 20%, and quarter 3 qualifies based on quarter 2. So it can get a little complicated here. And this is where our first step, even before a church or a business has signed an engagement letter with us, you know, we ask, just throw us those profit and loss statements or your gross receipts that you pull from those. Let us map it out for you, and we'll show you where you qualify. And that's just a kind of a good first step. I will be giving everybody access to this presentation. I'm not going to read through this slide, but if you did want to do any analysis on your own, maybe pulling your P&Ls, looking at those gross receipts, here's the definition of gross receipts. Skip to the end. It's your fully loaded revenue. It's everything. It's proceeds from investments, from grants, all donations received. It's that fully, really, truly everything you received in is what you're going to be looking at. Okay, so back to this test. I said there were 2 ways to qualify. We started with test 2. Let's now jump over dive a little deeper on test one here, the shutdown by government orders. And really, we're going to be looking at the partial shutdown. So first thing to mention here is it has to be a mandate from a government authority. It cannot have been a voluntary action on your part. So you could be shut down for half of a quarter by mandate and then chose to remain to be shut down for the rest of it. You would only be eligible for the first half that you were under the mandate. You're not eligible for the time period that you voluntarily remained closed. Full shutdown, obviously, doors closed, employees sent home, and we'll get into this later, but not able to do their job in a comparable manner. So teleworking, if they're allowed to telework and they can do their job in a comparable manner, then they don't technically qualify for the credit. What we've got to show is that these restrictions, these mandates, did not permit them to do the job in a comparable manner if things went to online and virtual. Partial shutdown. So this is social distancing requirements, capacity limitations on your building, general group gathering restrictions, travel restrictions. The list is actually pretty long. These are different ways that you can qualify under a partial suspension. And I like to use the word restriction is kind of more appropriate here than a partial shutdown or partial suspension. It's what were you restricted from doing that back before COVID you were doing as normal operations and functions of your church. Now, one thing that we do have to do is show that whatever restriction it is we're qualifying you under or set of restrictions, because you can get multiple and kind of combine them all together, we have to show that all combined, they had a more than nominal impact on your church. So you didn't just wear masks and put out hand sanitizer. This actually impacted the bottom line. This impacted your revenues coming in, or it impacted your man hours of your employees. And what the IRS likes to see, this isn't in statute, it is in regulation. It's a bit of a gray area, but they threw out this 10% number. They want to see that the impact on your operations was more than 10%. Okay. And I'm breezing through this. So, my goal here is kind of give this overview. And then if you guys have any questions, unmute yourself at the end of this. And I'm happy to answer any questions and talk about your current situations. Okay, so what I've got up here, this is just a sampling of the orders and the calendar of events that took place on a state level in California. We have a database of a whole lot more orders when it gets down to the local county, city level, which oftentimes we will go down to. My research team will dig pretty deep and pull all of that, because you'll have a church in one county that was under one capacity limitation and in another county that was not. And this can impact eligibility. So even though they're in the same neighborhood, eligibility can change pretty quickly. But these are the government orders, the mandates that we're talking about that would qualify your churches. Okay, so what was restricted at your church? Obviously, if doors are closed and nobody's doing anything, then all of these activities here are what we're qualifying you under. Your youth activities, the youth ministry, the youth fellowship, any youth activities that you're doing that you're no longer able to do, any amount of time you spent on that in 2019, that now goes to your pool to get to your 10%. Look at your, choir, the men's ministry, women's ministries, marriages, ordinations, elders, deacons, baptisms, communion, sacraments, all of that. We're in other religious communities. We're seeing a lot of Jewish temples, bar mitzvahs, feasting, all of that they were no longer allowed to do is how they're qualifying for this credit. These are items that you were restricted on when you were shut down pretty hard for a very long time there in California that are qualifying you for the employee retention credit, because you could not do these things, which were the normal functions of your church prior. Okay, so what's it worth to you? What we've got here is if you qualify for the entire period of time, which is going to be the last couple weeks of March in 2020, all the way through the end of September of 2021, you're able to look at any wages and any health plan expenses that you paid during that time. Now, some caveats here. First off, it's W-2 wages, so no 1099, no contractors. Part-time and full-time, it doesn't matter. You can include both. You cannot include self-employed. Most clergy are going to fall under the self-employed category. Not all, but most of them will. So you won't be able to include that. And then you can't dip on wages, double dip with the Paycheck Protection Program. So if you took those loans and those loans were subsequently forgiven and you used a portion of that forgiven amount to pay wages, we can't double dip with that amount. So one of the jobs we have is to account for that fully, make sure that that's accounted for and that there's no double dipping of that program. You can also include health plan expenses. So under the health plan expenses, this is pre-tax, employer side. This is medical, dental, vision. There will be no supplemental policies. So the AFLAC stuff does not qualify. HSA contributions do not qualify. No reimbursements qualify, and no medical sharing programs. So your Samaritan Ministries and your MediShares do not qualify as health plan expenses. So if you do have group health plan though, and you're paying that, that's recoverable cost. All right, another busy slide I'm throwing up at you guys here. This is just highlighting the different segments that you can qualify. So the testing is going to be done separately for each of these. In 2020, you can get up to a maximum of $5,000 in wages and health plan expenses per employee. So that's for all 4 quarters. You get up to $5,000. That's your cap. In 2021, when they expanded the program, they raised that to $7,000 and then made it $7,000 per quarter that you can get. So in 2021, if you qualify for the first 3 quarters, which is the standard program, you're going to get another $21,000. So $26,000 combined. The 4th quarter is limited only to recovery startup businesses. It got taken away from us at the end of 2021. So that is no longer part of the standard credit. So you would not be able to take it. Only businesses, new business, small businesses that started after COVID. For very large churches, probably doesn't impact any of you guys, but I do want to mention there is a large employer definition, which would severely limit your credit. So if you have more than 100 full-time employees, it would limit your ability to claim this. We have several churches where there is combined payroll and some schools and stuff like that as well, where that came into play. But for most churches, it's not going to. And that was raised to 500 employees for 2021 quarters. Okay. Claiming the credit. How's this done? So what you've got here is originally this was designed for a church as you're going through COVID and as you're paying payroll, paying those wages to claim the credit on your 941 filing. That's your payroll withholding tax returns. Most people were so busy with PPP, this wasn't even on the radar. And so what we're doing now exclusively is amending those returns. All the eligibility periods for the ERC are behind us now. So we have the 3-year statute of limitations that we're allowed to go back and amend those payroll tax returns to claim the credit. 2 options for doing that. The first option is going to manually prepare, fill out those 941Xs and mail them off to the IRS. Can't do it electronically, has to be mailed. Essentially, the IRS will take that. They are a great big black hole right now, very backlogged on processing 941Xs because of this program. So it's going to take a while to get the money. 8 to 9 months is what we're telling people. That's kind of what we're seeing today. Work we did and filings that were done 8 or 9 months ago are the refunds that are coming in. So it's going to take that long to get the refund. This is not something you're going to get in a month. It's something that you take care of now, And then at the end of it, 8-9 months later, you get a big refund check from the IRS once they've processed it. Option number 2 for claiming this credit is to go through your payroll company. So if you go through the payroll company, we still prepare all the 941Xs. We prepare everything, all the employee support schedules and the audit support at the end of it. But you could choose, we have Excel files in ADP's format, Paychex format, Paylocity, Paycor, TriNet, all these different ones, Heartland. It's the formats they want to see. So we put it in that format and they can just take those and import it into their system. Now, doing so will make your historical payroll records more accurate. If you later on you ever had to go back and change anything. However, it's going to add 2 to 3 months in processing time to get that refund check. It was imperative, and we were recommending people go through payroll companies initially when they were filing these on original 941s, so that the withholdings are all done right, so that the end of the year 940 is done correctly. Now there's no imperative. 95% of people are just amending these by manually filing it. So we're recommending that people just mail that and then provide a copy to your payroll company of those 941Xs and, of the final report that we give you. That's fine. And then they will make a note on the file that you have amended this, but they're not going to go back and amend all those prior records. So that is the difference. If you use a PEO, professional employer organization, you have to go through them. You don't actually file a 941 in that case. They file a 941, and then you can still do that, still claim the credit, and then it gets dispersed based on the Schedule R that comes back to you guys. So you can go through a PEO, but if you're using a PEO like ADP Total Source or TriNet that I just mentioned, Paychex has a PEO service as well as a payroll service. You have to go through the PEO, and we will hold their hand through that whole process. And we have, again, all the spreadsheets and deliverables as they like to see it. Again, filing it manually, you save yourself time, get your money back quicker, and generally speaking is a lot easier. I'm going to back up for a second. So if you do go through a payroll company, a big recommendation is to babysit them, because you've got people moving very fast. I can't tell you the number of credits, and it's so unfortunate, where businesses waited 8-9 months, got their refunds back, and it was half the amount that they were owed because the payroll company did it wrong. They took the wrong column. They put it in, inputted it incorrectly. A lot of them have worked through those wrinkles, but we still recommend holding the hand of the payroll company if you go through them. Okay. Statute of limitations here. So what I wanted to highlight here, so our final report that we're going to give you, typically over 100 pages long, all the employee support schedules, the forms, the memos and write-ups and results of the research, everything that you need to claim this credit. The IRS extended the statute of limitation on this from 3 years to 5 years. And I say extended the statute of limitation, they extended it not for you to go and claim it for 5 years, but for them to look at it and examine it. So you don't have your normal 3-year statute of limitations, which cuts off their ability to go back and audit. That's extended out to 5 years. They want to give themselves more time to look at these CARES Act programs. And if you read the news, you'd understand why. There is so much fraud. There is so much businesses moving very quickly with this credit, with the other credits, the PPP loans. We won't even talk about the unemployment stuff that happened. There's a lot that they're going to be looking at. Obviously, they're not going to have the manpower or the ability to look at everything, but they're going to look at as much as they can. These CARES Act programs will receive more attention than normal, which is why you really want to nail this down on the front end, get it right. So I just wanted to highlight there for any of you who did want to do it yourself. You're going to, attempt this, tackle it. Things you want to document is going to be how you're qualifying, that whole methodology, the partial suspension rules, all of that, source wages, source health plan reports, how you're treating PPP. That is absolutely critical and probably one of the first things that any auditor is going to look at, see if there's any double dipping. make sure you have all your employee support schedules, and then get the copies of the government orders and include those in your files. That is something that the IRS has highlighted that they will be looking for. Okay, so that is essentially the employee retention credit. I know I moved very fast, and again, I will make this these slides available to you offline. A couple other things, I mentioned teleworking here. Does teleworking qualify? Let's see here. Teleworking, again, if you're able to do the job in a comparable manner, then no, you're not going to qualify under the partial suspension test. However, teleworking, because you went virtual, because services were streamed virtually, that does not disqualify you. Initially, and I'm highlighting this because initially a lot of churches were saying, no, we read that if we went virtual, then we couldn't claim the ERC. That's not the case. You can claim the ERC because of all of those other factors that I showed you earlier. What happens when a government order is lifted? Again, I kind of addressed this. You're only eligible for the credit so long as the order remains in place. The day it's lifted is the day you're no longer eligible to count wages for the ERC. Can you qualify under the gross receipts and the suspension rules? The answer is yes. It's interchangeable. It's an either or. So one quarter you might qualify under gross receipts, the next one under the partial suspension rules. And then we'll talk about utilization here. What happens if the payroll taxes are lower? This is a fully refundable credit, meaning that if you are current on your payroll tax liabilities, you don't owe anything, and you claim a $300,000 credit, you're going to get a refund check for $300,000 in 8 or 9 months. So it's not something that you're just going to be utilizing to offset your taxes for the next 5 to 10 years. You will get it in a check in one big lump sum. And that's pretty much it. So, I mean, I guess at this point, I'd like to kind of turn it over to anybody. If anybody has any questions or wants to talk about your scenario, your situation, I'm happy to answer questions or revisit any of the slides that we went through. If you do have any questions, you can unmute yourself, and we will be, I did record this, and we will be putting it up and posting a link to it as well.
I have a quick question for you.
Sure.
St. James was the beneficiary of 2 rounds of PPP. So based on my understanding, that means that it would only be the healthcare costs we might be eligible for under this. Is that correct?
Well, not necessarily. So what we have found in most cases, and this is not every single case, but oftentimes the PPP covered period, your 8 weeks or your 24 weeks, do not align with your ERC covered period. The ERC is typically a broader, larger period that you covered. So what you're looking at is generally wages before the PPP that you qualify for, wages after PPP, and between the 2 PPP loans that you qualify for, and even during. Oftentimes, particularly if you used any rents, utilities, any non-payroll costs on your forgiveness application, then during that time, that even during the PPP loan, there's often a little bit of ERC wages that are remaining that you can take. And again, we have some flexibility with this. If you have PPP that's in a period you don't qualify for ERC, we might kind of front load that PPP, put that towards wages on the front end, allowing more ERC on the back end. It kind of, you can move those around a little bit to maximize both opportunities. What you can never do is take a PPP dollar and an ERC dollar for the same dollar.
Got it.
So
Thank you so much.
It does have to be separated. I got another question on what do we charge for consultation. Our normal fees are 15% of any credits that we calculate and you go claim. For churches, we do 10%. So that is 10% of any credit that you claim, and we put a cap on that. And that is only when you claim the credit and when you have received that refund back. So there's nothing out of pocket for you when you are holding that refund check. That's when we'll reach out to you for our fee.
And this is Terry from Westminster. Let me go back to St. James for a second. So we also received both PPP loans and were 100% forgiven, and we still qualified for 6 quarters of the time periods for the ERC. So I know that some of this kind of is swimming in your head and may not make a whole lot of logical sense. I really do encourage you, pull your quick gross receipts data, send it over to Jeremiah and his crew, let them do some quick calculations and come back to you, and then make a decision. Is it worth some time to start pulling payroll records and some of the other? I was astounded. I really, really was astounded.
Yeah, and Terry, probably what you saw was, maybe a larger initial quarter for ERC. During those PPP time periods, your credits probably went way down, but you still had credits
Right.
in those periods. That's often what we see. You mentioned pulling payroll. Let me speak to that for a second. What kind of documents do you need to pull this together? So my team, when you sign our engagement letter, so after, maybe we've received those P&Ls from you, those gross receipts, we're like, all right, there's meat on the bones here. We want to move forward. We'll send you an engagement letter, couple clicks, that comes back to us. Once we get that, you will be assigned to a project manager. That project manager will send you an information request, payroll reports, copies of 941s, health insurance documentation. If you took any other credits like paid sick leave, paid family medical leave, things like that, we have to know about that. And oftentimes that's going to be on your payroll reports. But they'll get you over that list, as well as a shutdown survey. So the shutdown survey, it's just 5 questions, but it's, paint the picture for us. How was St. James impacted by COVID? What ministries were you not allowed to do? What restrictions were you under that really impacted you? Kind of tell us the story so that we can turn around. My research team takes that, writes up a memo so that there is a narrative for the IRS if this is ever examined. And that shutdown survey, once we receive that back, it goes, again, my research team, they'll pull all the orders. Once we have all documents from you, it typically takes my team about 3 weeks to pull all of this together, calculate the credits, go through our review process. We take about a week for the review process. And then you have the 941Xs, and that's it. Again, filing and then waiting 8 to 9 months to get that refund check. So a lot of waiting with this one, unfortunately. At this point, if we had gotten these on original 941s, you'd have received the refund check within about 6 to 8 weeks. But not now.
Jeremiah, thank you so much
Absolutely.
for your very helpful presentation. We had estimated about 40 minutes to this interaction, but I wonder if there's any other one last question that anybody would like to ask. This might be the time to do that, and before we wrap up our time together.
Not a question, but I said that I would share my contact information. And, as the business administrator, it does not have to just be to talk to me about the ERC. I'm all about networking and figuring out best practices and who does it well and who do I need to learn from. So feel free to reach out. I am putting my email in the chat and sending it to everyone, but it is Terry, Terry, at W, P as in Peter, C as in church, westlake.org. And I'd love to hear from you.
All right, very good. Thank you, everybody. Really appreciate your time. Thanks so much for coming out today.
And thank you, Juan, for organizing this.
Yes.
Bye, Jeremiah. Bye, everyone.
Bye. Thank you.
My pleasure. Take care.
All right.
Enjoy the rest of your day.
Bye-bye.